We are officially in summer now. This is June 1st. What better way to kick off the summer than start a trade watch list? This is going to be trade watch list and the stocks I'm looking at for the week of June 2nd. These names are in no particular order. The first is going to be Costco. We just had the earnings report come out on Thursday after market close, and we had a really good reaction here. This move on Friday was almost a 3% move. The biggest thing that I'm looking at is the fact that we're breaking this downward trend line here. And this shows you that there's a lot of potential for a continuation on this name. And if you look on the weekly time frame here, it actually doesn't even show any volatility that happened before the earnings report. All you're really seeing is that we're holding up the 8 EMA, showing you that there's likelihood for a more upwards movement and momentum to continue forward. This further reaffirms the idea that it's likely wanting to break this downward trend line and continue higher and test this all-time high level at around 1076, and then probably test 1100 and higher. So what I'm really looking for is probably a close above this 1052 level, which was made on Friday. For that to break, I want to enter the 620 1100 calls. I really like this look because what we did is we broke out past this resistance at this local high at around 1039. And then at the end of market, we ended up actually pulling back, but it's just simply could be a retest. So what I want to see this week is likely some type of really strong buying response, maybe test this lower bound of this trend line and then continue higher from there. If we're able to see that, that would give me really high confidence to enter this June 20th contract. The second is going to be Hood. We've hit this one a lot, but I think there's a lot more potential for a continuation move or further. I'm looking at the June 20th 70 calls. The trigger is going to be above the 66.91 level, which is the local high that was made way back in around February, mid-February here. If we're looking at the daily, we've hit it quite a few times now. So first, obviously, is when that wick happened in February. And then in the most recent price action, we've tried testing that range for about 5 trading days now. And we really struggle to break fast above it. Usually this tells you there's potentially weakness in the market and in this name, in the sense that because it's struggling to break it, we might just have a potential double top and it will get pulled back dramatically. But because of Friday's price action, what you're seeing is that on extremely high volume too, versus the days where it sold off into that 8 EMA, this gives you a higher confidence that this all-time local high level will be tested again and it can actually break it, because now we're flipping to the bull side of this scenario where the more times a resistance point hits, the more likely that the next time it approaches it, that it'll actually break that point. The other interesting thing is that because Friday was end of month rebalancing for a lot of portfolios and other market participants, and because there's so much buying volume, this could potentially signal to you that a lot of institutionals as well as other entities in the market that have a lot more money likely are buying more stock of Robinhood. The next name is going to be Spotify. This one is a name I've been tracking a lot, and I will admit I've actually lost a little bit of money in the past couple of days trying to catch this breakout. It's been very stubborn and the action has been very volatile. If we actually measure this range for the dailies here, we're on the daily time frame, each move every single day has been about almost 4.5 to 5%. So extremely volatile with the actual underlying, which obviously tells you the option contracts in of themselves have been extremely volatile as well. But we're actually starting to see a lot of strength. We're actually getting a weekly close above this resistance at 664, which is the most recent all-time high that was made. And we closed really strongly on Friday, similar to Robinhood. I'm looking at the June 20th 700 calls. This is likely going to be for more of the bigger pockets out there because these contracts are so expensive. But if we're actually able to get a really good strong push past this level instead of this choppiness, if we get a clean breakout and just like a really aggressive move to the upside, these contracts will likely accelerate in value exponentially. The next name is going to be DoorDash. We had this one on the list last week, but because there was a little bit of choppiness and just really uncertainty in the market, last week's trigger was around this break of this 207 level, and we actually did end up getting that. So In terms of revising this trade plan, I'm going to move it up and I want to see a break past this 209.74 level, which was made on Wednesday, May 21st. If we can get a, let's say, an hour or even a 15-minute candle close above this level, then I will likely enter the same contracts as last time, the June 20th, either the 210 or the 220 calls. We actually go down to the lower time frames, specifically the 15-minute. What you're seeing is that we actually didn't have a single 15-minute candle close above this 209 level. So we tried doing that here, but the very next 15-minute candle we rejected really hard. So likely for this trade, I want to see that 15-minute candle actually close on a really good candle here. We don't want to see this type of wick where sellers really took control. And if we look at the daily time frame here, this is very similar to the Costco look, where we're trying to break this downward trend line. We've been retesting it a lot as the EMA's caught up, but all of these daily candles failed to close under this downward trend line, which gives you more confidence and confluence that this is likely going to continue. And so what I really want to see is obviously that 15-minute candle and daily close above that 209, and then eventually break this 215 level for a continuation to get the 220s likely in the money. The next is going to be Snowflake. This is a software name that has had a lot of really good, strong momentum, especially after the earnings call that was on May 21st after hours. The one potential catalyst and risk factor is that CrowdStrike does report earnings on Tuesday. So in that sense, you could play Snowflake as a sympathy. CrowdStrike actually looks really good too. We recently just broke the recent high at around 456, and we're actually consolidating and it actually looks good for potentially higher. But of course, with earnings, it's kind of a toss-up and a coin flip. But as a sympathy, I'm very interested in entering Snowflake. Right now, we're actually in a gap fill. This gap fill was made in March of 2024 after its earnings. It goes from 226 all the way down to 194. So we're kind of in the almost midway point of this gap fill. And the first target and likely resistance point is going to be this 210, 211 level. So I drew this green line because not only did we kind of have that resistance in previous price action, but it was also the bottoming point here on February 21st before we bounced really aggressively. So I want to see us really take out that 210, 211 level before I'm super convinced that this is likely a play that will continue to finish this gap fill and then have a continuation move higher. Usually, when you're looking at a type of trade like this, you would want to probably take it off this 209.8. But because it's so close to that midway point at that 211 that we were just talking about, I'd rather just wait for that 211 and then actually get that confirmation before entering this trade. I'm looking for the June 20th 210 call. The trigger will be above this 211, 212 level. And lastly is going to be Meta. I left this one for the last because I think it's probably going to take a little bit more time. This giant flag that we're seeing is really, really wide. So for reference, this range from the highs to the lows is a 6% move. Obviously, with these names, they can move really aggressively, but this range is really, it's a lot. And it doesn't feel like to me that it's going to make this move yet, especially when some of the other names in the Max 7 look weak, right? Like, for example, Apple here looks a lot more weak than some of the other names like Amazon. Netflix obviously is going to be a differentiator where it's a lot stronger. So for Meta, I want to be convinced that this move will break out once the other Max 7s likely get some more momentum too. But the trigger will likely be above the 662 level. I'm looking at the June 20th 680 calls, keeping this in the back pocket just in case this move actually does happen this week. And I want to target this local high at around 686. I'm getting this level from these two resistance points where we flat out just opened and rejected off of it on this February 24th candle, and then we wicked past it on February 27th. And we never really kind of got up and above that level again, and we're starting to approach it now. So I want to see us break this 6A62 level and then test that first. If you go on the weekly actually looks pretty decent. And then after this 686, obviously I want to see if we can test this all-time highs at around 735. When you look and see that this downward trend was broken and then we're actually just consolidating on the weekly, it looks really good, and the 735 level does not seem that far-fetched. We also have a pretty jam-packed week with data. I think we have data almost every single day. So we have Fed Powell speaking on Monday, as well as PMI coming out at 9 a.m. And then on Tuesday, we have JOLT openings. Wednesday, we have non-farm employment changes. And then Thursday, we have unemployment claims. And then to close off the week, which is probably going to be the biggest hitter, is our unemployment rate. So all of these factors play into the grand scheme of things in the market of whether or not the Fed is going to continue to cut rates. Right now, we're anticipating 2 cuts for the year, but all this data can potentially change that. We can either cut more or we're likely not going to cut and reduce it. So these are things that can potentially really cause some short-term intra volatility that you just have to be careful of. So as a reminder, always be cognizant of what data is coming in. So if you don't want to swing a position into a certain type of data, make sure you close it out before market close. That is it for the week of June 2nd. Thanks for looking at some of the names with me this week. Good luck in the markets, and I will catch you guys next week.